All right, so we're here with Alex looking at SPY. Going to talk about some strategies, where we see the market going, et cetera, et cetera. So first of all, I just wanted to look at where the daily chart on SPY was now. I mean, the last few weeks we've been really bearish, and of course, once we get bearish, you see 6 green candles in a row. 1, 2, 3, 4, 5. 5 green candles in a row. Yesterday it actually went red before it was after it was green. But we're looking at these resistance levels. I've drawn resistance levels through, all the way back a year ago, and these levels have pretty much stayed true. We see this 416, 410 level, which got hit 1, 2, 3 times around 410 to 414, and then of course you see it here once again. I didn't even realize that until now. 415, 416 is again the level that hit twice, actually 3 times including the day, and we got a pullback. So again, these levels are continuing to remain. Sometimes there's a temporary shakeout where you don't really think these levels hold, and then at the last minute they find support, they hit resistance, and then they act accordingly. So wanted to kind of just break these charts down. It may look a little bit messy, but like I said, this is going all the way back a year from now. So I'm not going to ramble. We were again today just looking at, and I was looking at the 416 level all the way back all the way back 2 days ago. Let me put this on the 5-minute. So on the 5-minute, when I seen this peak out at 416 pre-market yesterday or day before, and then yesterday's high was 416, and today we hit 416 again. That's a triple top. So just based on this triple top, I had a really good feeling that I didn't catch it fast enough. So sometimes you just want to, when you're getting key levels, when key levels are getting hit, you kind of want to just keep an eye on things, because if not, you can miss it. Let me share this Discord. And so as you see right here in the Discord, I talked about this engulfing, okay? So from 8:30, this is 8:34 this morning, I'm looking at this engulfing candlestick pattern, 415. I know that if this move goes down towards 412, this is going to be red engulfing red. Now, you don't really see red engulfing red that much. To give you an idea, I'll show you the last time what happened when we had a red candlestick on the daily engulfing red on the SPY. So let's take a look at that and see what happens. So we got red engulfing red here on 421. So we got red engulfing red. The SPY hit almost 450, and in 2 days we got a $25 move, 25-point move. So 450 all the way down to 425 at the low, and then the next day even lower, 419. So looking at a 30-point move in a couple of days, 2 or 3 days. So again, Tesla was what we were trading at that particular time, and we seen that same pattern where actually this red was engulfing green. I think it's engulfing, not quite, but almost. But same thing, same pattern. And then we got a move all the way down, as you see. So again, that's a really strong pattern to me that I've noticed. And so when I seen SPY this morning looking to engulf on a red candlestick, so again, this was the red engulfing red here on SPY, and then we get the same pattern today. So if we're looking at just trends, then we can clearly see that this starts a downtrend and the bottom may be somewhere around 387. So it may not get there, never have exact levels as far as when you're making an entry. You want to start kind of averaging in whenever you're looking at possibly taking a position. And so that's pretty much what we wanted to talk about. The Fed is hawkish, which means they're raising rates. They're trying to slow inflation down, and they're trying to make sure that basically they want to keep everybody happy. But nothing they say makes anybody happy. So it's just that's why we've been so choppy and indecisive. So you got anything to add to that, Alex? Just on for the SPY chart?
No, as far as the that 416 level, I noticed that on your chart, yeah, it does go a while back, around like the 14th and 8th of March, around there.
Right.
You can kind of tell that it bounced off. It was used as support. So what's interesting with the S&P 500, and it's pretty common, is those support levels tend to turn into heavy resistance. So just a thing to keep an eye out. I've noticed that, especially for this past couple of days, those support and resistance levels are almost exchangeable. Like you can pretty much just change them up. But yeah, I mean, just keeping an eye on those key levels, it's always important. I tend to set alerts for mine because I'm not always looking at the same charts or anything.
Mm-hmm.
But either way, if I am trading the big board companies, I am always keeping an eye out on the S&P 500.
Gotcha. Let me give you. Let me see if I can allow you to. Okay, I'm gonna turn it over to you so you can actually share your chart, just to show. I know you use different indicators. You're a lot more technical, so yeah, just show us typically, briefly what you go through, what you're thinking whenever you're looking to recognize support, resistance, and entries, exits, etc.
Yeah, absolutely. All right, let's see if I can. Let me know if you're getting that.
Yeah, we see it.
Okay, so I've pretty much just set up a basic S&P 500 daily chart here.
Gotcha.
I'm using the bars because it's typically what I use to do my wave counts.
Okay.
So there's this theory that the market tends to move in waves.
Right.
After five upward waves, there's corrective waves, which is what we're seeing here.
Okay.
I've got wave W, X, and then Y, which was my kind of like my pivot point, I guess. So right now, we're looking at this WXY ended up where A is. So A is the total of all these three moves right here.
Okay.
The next move would be a wave B, which could end at these Fibonacci points, which would be 1.618, or let's see if I can get it a little bit closer, 1.236.
Okay.
So my targets, right now we're looking at an upward movement. We had wave 1, 2, 3, and then 4, which was a retest today, which was a retest of actually a supply and demand zone, which used to be supply. Let's see if you get a better visual of what I'm looking at.
Okay.
Okay, right there. So right here, this area where I've got this yellow bar, that used to be a heavy supply area. You can see that that test up here was it ticked down pretty rough.
Yeah.
But after that breakout, we tested another area of supply and bounced down as well. But I'm expecting, because of the rule of the 5 waves, and I have a couple of Fibonacci points placed here as well. Wave 3 was tested at the supply area. The supply is now demand. and I believe we still have a little bit of fuel to go towards these Fibonacci ratios up here, which is my target box. So it could be either this bottom line right here or this top box right here, which also happens to be a key Fibonacci ratio of wave 5 versus A. So if I were to trace from here to A, yeah, 0.382, which is a pretty common Fibonacci retracement. So as far as short term, I'd say we have gained some higher highs and some lower lows. So I think the trend does continue slightly a little bit more. But as soon as we get to this box right here, I think we see pretty heavy resistance, and there might be a continuation of a downside. So as far as short term, short term I'm a little bit bullish. Long term, staying bearish. Again, we could also test this upper trend line channel up here. But as far as the downside goes, we lose this lower trend line, then we'd most likely test the 3436 area, which happens to be, I believe it was 0.5 Fibonacci ratio from COVID lows. So this wave count I've been doing since COVID lows, and I've just been using key Fibonacci ratios since then. So if we take a dive here into the 15-minute chart, I'll tell you a little bit more what we might be looking at. Just fix this. Alright. So, the good thing about Elliott wave theory is that I just follow a really specific set of rules. Not only that, I confirm with my indicators as well. So any divergences that I see would be applied to my trading. But again, mainly for the S&P 500, I'm just looking for, like you said, those very important levels that go way back, because there is definitely a correlation between them, and majority of the time, those resistance levels turn into support, or those support levels turn into resistance. But then again, so we're looking at this upper move right here. We have wave number 1, wave number 2, wave number 3, wave number 4, and then our target, which is wave number 5. So usually, because of the simplicity of this wave right here, which would be wave number 2, which is a downside wave, 4 is also a downside wave. So because of the simplicity here, I believe that wave number 4 will play out a little bit longer. So I think for the very short term, there's going to be a lot of chop between these two supply levels.
Okay.
So I think we're gonna stay within this range for a little bit, which is definitely unfortunate. We like to see when the S&P 500 picks up on a decision or on a side, but I think we're definitely going to see some chop until we either break below or break above. So yeah, I mean, as far as that goes, that's usually what I use. I like to also think about not just the S&P 500, but pretty much any other ticker. What you're looking at is it's a standard kind of like a bell curve. So when I look at this chart, I've noticed that you can kind of tell that there are definitely certain points within this chart that the price kind of stayed within. So what I like to do, I don't know, since the market is based hugely on probabilities, you're kind of looking for that edge, right? You're kind of looking for what will give me a higher probability